Good morning, everybody. It is Monday, February 26th, 8:45 a.m., and we are here once again, back on the market open. I hope everyone had a good weekend. We've got a lot to talk about today. There's a variety of topics. I think it's going to be a very exciting week in the markets. This is the last week of February. We're going to be in March very, very soon. And we're ending off 2 months into the trading year, and it's been quite an interesting 2 months into the trading year. So we got a lot of stuff to talk about. We have to talk about Buffett and his cash pile. We have to talk about the NABE survey. We have to talk about Michael Saylor, who just bought 3,000 more Bitcoin. We have to talk about Ethereum that's surging past 3,000. We have to talk about the relationship between Palantir and nvda. Have some new thoughts on that. Robinhood right now is up $14.78, 2% in the pre-market. And also, we've got a lot of earnings this week. Today, we had Domino's, which absolutely crushed earnings. I thought after NVIDIA, kind of like everybody else, earnings were done. We have another week left of earnings, which means we have a lot of earnings calls to listen to this week. And there is a lot of companies, Zoom, Snowflake, Celsius, like some pretty big names that I didn't even realize we had earnings for. We're going to go through all those companies and discuss the different things we have going on. Now, before we get into the market open, I had a pretty interesting Sunday morning. And I basically, I woke up and I went downstairs and I actually got to talk with my parents for the first time in a while. I think, life has been moving very, very quick. I've been in go mode, just constantly moving, constantly running. Really didn't get a chance to talk to my parents, honestly, for the past month. I mean, February has just been a hell of a month. Has been very busy. I think March, based on some of the things that are happening, is going to be even busier. And so actually, I got some coffee for all of us. I went to Dunkin', came back, and we just got to talk. And one of the things they talked about that actually hit me, which is why I wanted to start off this morning open with this little monologue, is, and I haven't thought about this in a while. They started talking about their will. And they were having like a really honest, transparent conversation about like the will and what's going to go to me and my sister and all this stuff. And in my head, I'm just like, death? What? Why are we talking about death? Like I've just been so go mode. I haven't even thought for a second to think about the fact that we all die one day. Like it really hit me. And this is coming from someone who thinks very philosophically about death. And I've thought about death and pondered and pontificated about death a lot when I was in college. That's when I was kind of forming my philosophical views on life. But I haven't thought about death in such a long time. And so my parents having that conversation with me, because they're getting older. And, as you get older, you start to think about it and you want your family to be well off when you eventually pass. And, we started having that conversation. And I was just like, wow, it kind of hit me. And the reason I wanted to start off this stream with this is, we're all going to die one day. And it really hit me on Sunday because this entire February, I've been go, analyzing the markets, doing all this stuff, making content, like just been in the zone of trying to get stuff done. You kind of forget to stop and think that you're eventually going to die one day. Now, some people may be thinking, Amit, this is the most gloomy way to start off the market open, to start off the week. And I think actually mortality should be a motivation rather than a fear or trepidation. That's a fucking bar. Is it a pre-planned bar? Maybe. It might be a pre-planned bar. It might be. But it's one of those things that I think it's important to remember that we are going to die one day. And either you let that fear make you scared, or either you fucking work your ass off. After that conversation I had with my parents, I just wanted to work harder. And the whole Sunday, I just went back to work. I was like, you know what? I got to work harder. Got to keep going because one day this is all going to be over. Speaking of death, one thing I also did this morning is your boy went back to the gym. It's been a couple weeks since we got back to the gym, 5:48 a.m. There you go. It was tweeted at 5:48 a.m. That is the proof. Now, you didn't see any pictures of me actually doing the running and the lifting, but I promise you I did do that. So we worked out this morning. We're here for the market open. Thank you, everybody, for being here. Let's get into it today. Jacquees, Zocold, Erwin, Gift Magic, Benny, Chana. Chana says, let's go, Amit. It's warm outside and you don't need a sweater from your mom's closet or the leather jacket. It's actually kind of cold today here in New Jersey. The Foolish Hiker, Joshua, Ray, Tabor, Blake, Missy, Peter, Kenneth, Colorblind Collector, Dax, Justin, Arthur, Tyler, Ty, Gordon, Midwest, Sethi Roth, Jubei, Mitch, Mario Luna, Jacquees, Brian Murphy. I wouldn't bet against Palantir solving the death issue. You know what? To be honest, if Palantir solves the death issue, we're gonna be very, very rich. Zocold, Dax, Amen, Dexter, thank you, Brown Group Imp, and Brown Group Inc. And then of course Bay Ray, amid just reposting old pictures. I can assure you that was a new picture today. All right, let's get into it. So we got a lot of topics to discuss. A lot of stuff happened over the weekend. The first thing we're gonna get into is Ethereum. we are going to talk about ETH. Now, what is going on in the world of Ethereum? Ethereum is surging. It's up 52% over the past 3 months, and it's up basically like 10% over the past month, breaking 3,000 pretty handily over the weekend. Now, why is this happening? There's a couple of reasons. The first reason is pretty obvious. The Ethereum ETF is now being rumored to becoming a real thing. BlackRock obviously submitted an ETF proposal for this, I think about a month ago. So it's not like people didn't know that there was a sort of spot ETF thing that was happening, just like they knew for Bitcoin, but maybe it's starting to materialize a little bit more. And we're seeing this in the activity on the exchanges in terms of how people are consolidating their Ethereum. So let me show you this. This is from an article I was reading this morning on Ethereum. And this is actually really, really interesting stuff. So cryptocurrency ETH whales, these are people that have significant amounts of ETH, withdrew approximately $64 million worth of ETH. Remember, the market cap of Ethereum is about 350 billion. So 64 million of Bitcoin might not be that much because Bitcoin's close to $1 trillion, but of Ethereum, it's a far greater percentage. This significant activity comes amid a notable increase in the price of ETH, further fueling speculation and interest in the cryptocurrency market. Lacune Chain revealed that substantial sums of ETH have been moved from the clutches of exchange to more secure environments. So one of the addresses withdrew 14,000 ETH, which is about 45 million, from Binance, and a couple of other big wallets also started to accumulate and remove their ETH from different areas. Two new whale wallets have collectively moved 6,000 Ethereum, equivalent to 18.7 million, from Kraken, which is one of those crypto exchanges, to unknown destinations over the past couple of days. This doesn't mean they're selling their ETH. This just means they're moving their ETH into different directions. Now, why would you want to move your ETH onto more secure platforms that have a bit more safety? Well, you think that there's likely going to be a run, and eventually when you do want to sell your ETH from that run, then obviously you're going to have to make sure that it's in a secure position. And so that's what we're seeing right now on Ethereum, and that's led to a lot of momentum right now in the context of what we have for the Ether markets. Right now, Ethereum at 3,060. We hit 3,135 over the weekend, which was obviously very exciting because we got over that psychological level of being over 3,000, and a lot of people were looking forward to Ethereum getting to that place. Bitcoin as well, it's down a little bit in the market in the pre-markets, but it was up 1% of the weekend. It was at like 50,800. Now it's at 51,240. So it also made some strides. Now Bitcoin is a lot more sell side pressure at that 52, 53 level, whereas Ethereum has basically busted through 3,000 and seems like it's stable there. Obviously could fall back down, but that is getting the markets pretty excited in terms of what's going on for Ethereum. Zoom earnings are today. Yes, we're going to talk about earnings for a bunch of companies. I really thought after NVIDIA, we were done with earnings seasons. Like I was like, all right, we're done. We're good. Because like earnings seasons is a lot to cover. And next time for Q2, I'm going to be much more prepared. This was my first season as like a full-time content creator covering earnings. And I don't think I was as prepared as I should have been. But I'll be better in Q2. But we got a whole another week of earnings, which we'll talk about in a second. And it's a lot of companies. Like it's a lot of companies that we have to talk about. So that is what's going on with Ether. Let me know in the chat if you own ETH, if you're bullish on ETH, if you care about ETH. I mean, I personally don't have any ETH, quite frankly. My play is a different play, which we'll talk about in a second. I don't know that much about Ethereum. I know that it's primarily used for staking. I know that the APYs are intense on it. I know that smart contracts are incredibly lucrative in the context of how businesses can operate from a digitally native perspective. And I know that NFTs obviously primarily run on Ethereum. One thing about ETH is ETH. If you don't want to literally buy the Grayscale Ethereum ETF is also not, I think, the worst way to play this. Is kind of just like a proxy for Ethereum. This thing is up, I think, 50%. Let me check right here. This thing is up a lot in the past month as well. So, I mean, there is kind of an ETF for it with Grayscale, but it's not like legitimately a spot ETF. And so that's what a lot of people are getting excited about, that it might happen coming up soon. Yeah, Ethereum, ETH, the Weeble's not showing it correctly. It's actually up in the pre-markets 4.35%. Weeble's right now showing it down 2%. And over the past month, it's up 50%. Basically a proxy to Ethereum. I mean, Ethereum's up 52% in the past month. So we are seeing a lot of momentum now in the context of Ethereum. Sam, thank you for the £9.99 super chat. He says, hey, Amit, is the Bitcoin halving event likely to impact Bitcoin crypto-related stocks immediately? Also, has the AI hype changed expectations for Palantir for the end of the year? Appreciate you for all your videos. Two good questions. So the Bitcoin halving event likely to impact Bitcoin crypto-related stocks immediately. I think the run-up we're seeing in some of these, like, for example, CleanSpark, that's up like 100% from the lows back in, remember, January 19th, CleanSpark was worth 650. Now it's pushing 17. I think, yes, that Bitcoin went from 38 to 51. That's like part of the reason. But I also think a lot of the whales or the institutional investors are preparing, which is why these stocks have run up for the halving event. And the idea of the halving event is that the percentage of inflation of Bitcoin reduces in half. So it goes from 1.8% annual inflation to 0.9%. And when this halving event happens, if you just look at the charts, every single time Bitcoin hits an all-time high after the halving event within 5 to 6 months. So I think they're going to impact those crypto-related stocks, yes, immediately, but I also think that they've already started to impact these stocks. Like, you don't get a stock like CleanSpark that just jumps 100% really in a couple of weeks if they don't anticipate a massive move in the context of what's going on with Bitcoin. Remember, on CleanSpark's earnings call, management also said that when Bitcoin has their halving event, the miners also get the reward cut in half. So the only way for the miners to stay profitable and stay in business is if they have such efficient mining costs for Bitcoin, which CleanSpark has the most vertically integrated mining costs in that I've seen out of all the miners, that the margins have to stay the same. But in order for the margins to stay the same, because the costs don't go down or go up, Bitcoin's value has to go up. So right now, I think it cost them 20,000. Bitcoin's at worth 50,000. So they make 30,000 a coin to mine it. Bitcoin has to go up because that's going to reduce in half. So for the miners to stay in business, Bitcoin kind of has to go up. And historically, Bitcoin has gone up. And as a result of that, those miners will be able to stay in business because their margins won't decrease. But it depends on Bitcoin, the price of Bitcoin going up, because their costs aren't going to go down, even if the reward for mining does go in half. In terms of the second question, has AI hype changed the expectation for Palantir by the end of the year? No, I don't think so. I think the expectation for Palantir, like, I think legitimately $30 is possible, but they have to show massive growth in Q2, Q3, Q4, and Q1, obviously. They're up 50%, right? So the market has given them a premium, and I want to talk about Palantir and nvda in a second. We'll talk about that after Robinhood. But the market has given them a premium for a reason, and that reason is that nvda has shown that the market is big for AI, and Palantir is the intermediary software to be able to connect businesses with this emerging $1 trillion market. So I think it is very possible for Palantir to hit at $30. I also think it's possible for Palantir to fall back to $19 if they don't really put up the numbers. It's all going to depend on how fast they're able to grow. They've guided for decent growth. That's not like phenomenal growth, 20% year over year. If they can kind of sandbag that and get us to 25%, I think $30 is very possible in a bull market in 2024. The thing is, they've just already run up so much. So if they just consolidate at this level, I would be happy, because you can't ask for too much more as a Palantir shareholder, right? Like, we've gotten 45% gains year to date. So now they just have to stay at this level and hopefully not go too much down. What do you think about the Palo Alto dip? I'm still doing research on Palo Alto. I think it was unwarranted, though, down 30% for earnings that, honestly, their market cap just got priced to perfection. I don't think anything really bad about the company happened. They did have some changes in their go-to-market, which kind of spooked out investors. But I wouldn't say it's a buy for me yet, because I haven't done as much due diligence. But I definitely think being down 30% was not the best, was not warranted for Palo Alto Networks. Okay, that was Ethereum. Let's talk about Robinhood, and then we'll talk about Palantir and nvda in a second, because I had a couple of realizations last night that I want to talk about with those guys. Okay, Robinhood is up 1.73% of the pre-markets. We hit 1496 last night, 1485 this morning. Why is Robinhood up? And why was Robinhood up 3% on Friday when all the cryptocurrency stocks were down? By the way, in the pre-markets, let's look at the crypto stocks. They are all green, but not massively green. They're up. Coinbase is up 1%. CleanSpark's up about 2%. The rest of them are up slightly. And so they're more in trend today. But on Friday, Robinhood kind of deviated from these guys. And usually Robinhood doesn't deviate with these guys. I think it's a couple of reasons. I think number one, we talked about on Friday, Vlad tweeted the picture, the CEO of Robinhood, 24-hour trading. That's happening at new levels on Robinhood. And a lot of people probably looked at that like, oh, if all this trading activity is coming back to the platform, then obviously that's going to be very good for Robinhood and they're going to be able to make a lot more money. But there's another reason why Robinhood is up, and it's a pretty simple reason. And that reason is Ethereum. Now, why is Ethereum and Robinhood actually have any type of connection? I made this post over the weekend, and I kind of wrote out all my thoughts. So in a nutshell, Ethereum is up 50% over the past 3 months, still well below its highs of 4,800 during the last bull cycle. By the way, the last bull cycle, I was up like 3,500 on Ethereum when I didn't know what the hell I was doing. I was just trading it on Robinhood, right? Back in 2021, I ended up making like $700 because by the time Ethereum started falling, like I realized I should probably take some profits. But I remember when Ethereum got to 4,800, I was up a decent amount of money and I didn't sell it because I was like, oh, it's just going to keep going, right? Like this thing just keeps going up. And yeah, that didn't happen. But it is getting back to those levels, but still far away from that $4,800 high. Robinhood uniquely benefits from Ethereum. Number one, the first one is obvious: increased crypto revenues. More people will be buying Ethereum on Robinhood. They offer the lowest spread on buying any cryptocurrency. Obviously, Coinbase is, people argue, more of a like a I don't want to say secure, that's not the right word, but a platform that actually allows you to own the coins or whatever. The people that are going to be buying crypto, and we're going to talk about the retail trends in this market and why I think retail has not even come back into the market, which is very bullish because that means we're just at the beginning. Those people don't give a shit about a cold storage wallet. They just care about the cheapest way to get into the asset immediately. And in order to do that, they're going to search up. Robinhood is going to pop up. They're going to download Robinhood. They're going to make an account and they're going to start buying crypto, which means it's going to be very good for Robinhood. They did $43 million of crypto transaction-based revenues last quarter with more crypto notional volumes, which is what the market is perceiving. I think as Ethereum goes up, that revenue should increase over the next year. Now, here's the big thing that I think a lot of people didn't think about when it comes to Robinhood. There is a big MetaMask integration that's happening on Robinhood. And this is very important to understand just for the crypto markets in general, but also for Hood. MetaMask, which some of you may know in the chat because you probably use it, is the world's leading self-custodial Web3 wallet. They grew MAUs from 19 million to 30 million by January 2024. So in the past 5 months, 11 million people came to use MetaMask, which means people are looking for more Web3 solutions like they did back in 2021. Robinhood announced an integration with them back on February 6th, which a lot of people don't know about. This is a currency wallet that is specifically used with Ethereum. A lot of people use MetaMask to buy different currencies on the Ethereum blockchain. A lot of people use MetaMask to be able to buy NFTs, all these different things. Now their connection with Robinhood makes it easy for anyone on Robinhood to buy via MetaMask or vice versa for anyone via MetaMask to be able to not have to leave the platform and just buy via what's called Robinhood Connect on the metaverse platform itself based on that combination. So if Ethereum continues to climb, Robinhood is going to get new users who want to buy via their platform, and they will also have customers who use apps like MetaMask to buy on Robinhood without having to leave the decentralized applications they're already using, which is going to be big for Robinhood. So when you get Ethereum starting to rise, I mean, imagine Ethereum gets to 4,000, you're having an influx of new people not only download Robinhood, use the platform to be able to buy Ethereum, which is obviously bullish for their crypto transaction fees. But on top of that, you've got all these millions of people Robinhood doesn't have on their platform, but they're on these decentralized platforms like MetaMask that now are integrated via Robinhood that can buy Ethereum still through Robinhood without having to leave the platform itself. Overall, that's a really, really, really bullish thing for Robinhood. And that's why I think the market is obviously giving it the momentum right now. In the pre-markets, up $14.75. Beast Mode says Robinhood brokerage and Robinhood crypto are completely different things, likely due to New York and their bit license, which is restricted in New York City. That is correct. So there's two divisions. One is the brokerage, one is crypto. Robinhood would have Solana on their platform, but they didn't have Solana because the SEC banned it, and so they had to get rid of it back in 2023. But I did find out this weekend they have something called Chainlink and Avalanche on their platforms. Now, I knew about these cryptocurrencies. I don't know them that deeply, but these cryptocurrencies, Chainlink had 250 million in circulating volume last 24 hours, and Avalanche had 350 million. So, I mean, I know with Ethereum, by the way, their volume Sunday, last night, 14 billion, 24 hours. That's up 38% over the past week. So, I mean, obviously they're smaller compared to the Ethereum blockchain, but the fact that you can buy those things, what that means is there's going to be more alternative assets that people are going to buy potentially on Robinhood, which will just increase the momentum on crypto. And that's why I think the market's getting bullish and they're realizing, hey, something that has, $6 billion in cash, $12.5 billion market cap, maybe it's going to be really cheap when crypto explodes. And there's some momentum there in the context of Robinhood. Okay, so there we go. That's what's happening with Ethereum. That's what's happening with Robinhood. Let's talk about Domino's. Then we'll do Palantir, and then we'll do Buffett because we got some new news on Buffett. Okay, Domino's. Domino's crushed it. Now, this is a company. I don't know how many people know about Domino's history, but I think the stock is up Domino's is up. I mean, I'm about to check it right now, but it's like a multi bagger over the past it's up 3,000% since they went public. So they went public in 2004, $14, stocks at $4.33. I mean, it's like a tech stock. It legitimately looks like a tech stock. Now I know it's not returned 58,000% like Nvidia, but for a company that sells pizza, I mean, if you bought this thing, even in 2017, you're up almost 2.5x. If you bought this in 2015, you're up a healthy 3x. It did get to 564 during the bubble in 2021, fell all the way down to 317. You're still up a decent amount if you got in the lows on Domino's. Now, why is Domino's up 6% in the pre-markets? Why do they just continue to kill it? Well, $1 billion in buybacks. This is something we're seeing with a lot of these companies. They're buying more of their stock. And shareholders are rewarding them if they're buying more of their stock. That's number one. Number two, they somehow increased the divvy by 30 cents. So instead of 121, it's now 154. Boom. There you go. The divvy's up 30 cents. EPS, they beat by about 8 cents, and revenue, they beat by 100 million. I mean, there's nothing more you can ask. And to me, what do I take away from this in the general economy? Well, two things. Number one, their pizza is good enough to keep putting up these numbers. Number two, people have the money to buy the pizza. And this is something you want to see. You would not want to see Domino's not have good earnings, because that means that, families at home are basically saying, well, instead of, buying this $14.99 large pie with 2 toppings, we're just going to make food at home, which is fine. Probably from an obesity perspective, that's a better thing to do. But we don't care about obesity. We care about numbers. Okay. And we need to make sure that the American consumer is healthy enough, or financially healthy enough, not actually healthy enough, but financially healthy enough to be like $14.99 is not the biggest thing in the world in order for them to to be able to spend a little bit on Domino's. So I think it's really good for the broader consumer. And this makes sense. The labor market is continuing to do well. The consumer has money. Domino's continues to prove that if people have money, they're going to be able to spend discretionary income on things like food, like eating out type of things, even though this is not really eating out, but I would say it goes $25-$30 when, family of 4 is ordering Domino's, and that there's enough money in the system for those people to still being able to buy those things. Mr. Seymour Duck, thank you for the $5 super chat. Here's to great BRK earnings. That should transition us very well into Buffett. So Berkshire Hathaway has approached a $1 trillion valuation. And the reason they have a $1 trillion valuation, which is crazy, right? Because it's like these tech stocks have so many $1 trillion valuations. Berkshire Hathaway owns Kraft Heinz, and they're up, right? I mean, like, this is a company that just, you got to give it to Buffett in terms of what he's been able to do, and over the past years establish himself the way he has, and just like continue to be resilient. It's up 2%, $426. Berkshire A is probably $426,000 a share. But right now we're at 426. Now, what's going on with Berkshire? There's a couple of interesting components here when it comes to what Buffett is doing. Number one, he's heavy in cash. So they had $156 billion in cash, I believe, last quarter. This quarter, they are at $167 billion sitting in cash. Now, on the onslaught, that may say, well, wait a second, that's a little scary, right? Why is Buffett sitting so much in cash? But I think, and this is what Buffett said over the weekend in his annual shareholder letter, which I want to read a little bit as well in a second. He basically said, we don't see the opportunity to allocate this cash. He's being very, very patient with his money. He's basically saying, all right, until we see the right opportunity, we are not going to put in the money in a meaningful way. And so Jimbo Slice says he loves to say there's no deals. Yeah, I mean, look, Berkshire is very hyper competitive. They don't want to invest in stuff that's not realistic. I said on Twitter, I think they should just buy PayPal and go to Rover. It fits all the descriptions for why Berkshire would buy them, but they're probably not going to buy them. But now they have been accumulating a stock, right? Remember we said there's a secret stock they got permission from the SEC to not be able to disclose. I don't know what that stock is. At this point, I'm saying it's not PayPal, because I think PayPal would have a little bit more movement if they did buy it. But it's one of those companies that they're buying still with $167 billion. I don't necessarily think they're waiting for some massive correction. I mean, if they were, I think they would have sold more Apple, quite frankly. If Berkshire really felt like, this is 2021, things are getting out of hand, all this stuff, I think they would have taken some more risk off the table and sold a lot more stock. They're buying a crap ton of Occidental Petroleum. They're selling, a slight amount of Apple, 10 million shares. They have 950 million. So I think my perspective is that they just believe there's not a good enough deal for them to get into, which is kind of right. I mean, the market is, I think there's some good deals out there. I think there's, we might all think of different deals. We might think Palantir 23 is a decent deal, but Berkshire would never buy Palantir, and he's not going to buy a company like Robinhood, right? He's not going to buy, SMCI, or someone said they should dump it into SMCI. Maybe he should, but he's waiting for one of those deals. And the only thing I think that matches that criteria is Verizon, Disney, or PayPal. Disney's the least out of the three that I think are the best. Verizon he used to have, but he sold out of, but then Verizon fell to 29. So I think he probably thought I think he could have gotten back into that. And then PayPal's the last one. He's not going to buy PayPal, but I think that fits the best criteria. It's not going to be Meta, in my opinion. It's not going to be Amazon. It's not going to be any of the big tech companies. When do they have to disclose that company? Who knows? It was supposed to be the last quarter, but they got an extension. So I would imagine the latest would be the next 13D filing. So in the next 45 days, so a month and a half, we should get the answer. They already have Nubank. They have that publicly disclosed. So that's not the secret company. People are saying Sirius. That's also public. This is a company that's not disclosed. Like, they bought the stock and no one knows about it. And so every company they have, we all know about it. So it can't be any of those. So we're going to have to see. We're going to have to see what it is. Saskia Rose says it's a financial. I think so as well, which is why I think PayPal is possible. We know Buffett loves financials, but it's probably not PayPal, dude. So if it's not PayPal and it's a financial, then I don't know. I don't know what would be. Why does Berkshire have Nubank? It's not American. Berkshire doesn't only invest in American companies. They invested in Nubank, quite frankly, because their growth in Brazil and Latin America is beyond imagination. I mean, they're growing like 70% year over year in active users. Their transactions are growing massively. Brazil's their biggest market. I mean, their earnings were great. They fell a little bit because I think the stock's up 40% since October. But Nubank's growth is just phenomenal. I just don't know what the company could be. And I really think Verizon, Disney, or PayPal are the three American companies I would bet. But it's probably going to be some random company that we do not know about. It's New York Community Bank. Dude, could you imagine? Could you imagine? In his shareholder letter, he said his focus is mainly American. Interesting. Well, Nubank, I guess, is one of the companies that's not American. Now, here's what Berkshire wrote. I think it's worth reading this. This was on his late friend, Charlie Munger. And I want to read what he said. Chris tagged me in this, and he said, I hope Amit writes something like this for me when I pass. And then he says, and you better not use ChatGPT or I'll come back from the grave and bring about COVID 2.0 and make all your leap spreads expire worthless. So, by the way, speaking of ChatGPT, I have a newsletter, dailypalantir.substack.com. I'm going to put it in the chat real quick. I write all my newsletters without ChatGPT, so please subscribe to that. It is free. I put out a newsletter yesterday about NVIDIA and Palantir. I think you guys will enjoy that newsletter. And I actually don't use ChatGPT to write that. It takes me a shit ton of time. I hate writing. I don't like writing. I like talking, as you guys know. But, you know, there's 3,000 subscribers on the newsletter. I try to make sure it's a good experience. So I write on the newsletter. Okay, here's what Munger said. Or sorry, what Berkshire Buffett said. Charlie Munger died on November 28th, just 33 days before his 100th birthday. Though born and raised in Omaha, he spent 80% of his life domiciled somewhere else. Consequently, it was not until 1959 when he was 35 that I first met him. In 1962, he decided that he should take up money management. 3 years later, he told me correctly that I made a dumb decision in buying control of Berkshire. But he assured me, since I already made the move, he would tell me how to correct my mistake. And what I next relayed, bear in mind that Charlie and his family did not have a dime invested in the small investing partnership that I was then managing and whose money I had used for the Berkshire purchase. Moreover, neither of us expected that Charlie would ever own a share of Berkshire stock. They ended up becoming best friends, right? Nevertheless, Charlie in 1965 promptly advised me, Warren, forget about ever buying another company like Berkshire. But now that you control Berkshire, add it to a wonderful business purchase at fair prices and giving up buying fair businesses at wonderful prices. In other words, abandon everything you've learned from your hero, Ben Graham. It works, but only when practiced at a small scale. With much backsliding, I subsequently followed his instructions. Many years later, Charlie became my partner in running Berkshire and repeatedly jerked me to sanity when my old habits surfaced. Until his death, he continued in his role, and together we, along with those early on invested with us, ended up far better than Charlie and I had ever dreamed possible. In reality, Charlie was the architect of the present Berkshire, and I had acted as the general contractor to carry out the day-by-day construction of his vision. That's a hell of an ode to someone like Charlie Munger. Charlie never sought to take credit for his role as a creator, but instead let me take the bows and receive the accolades. In a way, his relationship with me was part older brother, part loving father. Even when he knew he was right, he gave me the reins. And when I blundered, he never reminded me of my mistakes. In the physical world, great buildings are linked to their architect, while those who had poured the concrete or installed the windows are soon forgotten. Berkshire has become a great company. Though I have long been in charge of the construction crew, Charlie should forever be accredited with being the architect. I thought that was a phenomenal metaphor for what's going on in the context of Berkshire and Charlie and Warren's relationship. And it puts in perspective. These are two guys that started this thing, 50, 60 years ago. And originally it was just Warren Buffett had a sewing company. That sewing company ended up failing. So he took the money that he raised for the sewing company and then turned it into Berkshire Hathaway, turned it into an investment fund. Chris actually told me that story. And then he started investing in businesses, but he didn't know what the hell he was doing. And so he needed some guidance. And that's when Munger said, hey, instead of just buying, all these businesses at great prices, why don't you buy really good businesses at fair prices and make sure you have long-term conviction in the business versus the price you're buying it at, which I think is a thesis that all of us can agree with. Like, buy a stock you actually care about, a business that's good, even if, the price is not a phenomenal price. And, Buffett ended up becoming one of the most legendary investors of all time. So really, really excited that that Buffett put out this letter and gave out such a good ode to Munger. And it just makes you grateful for the fact that Buffett is who he is and still doing his thing. And obviously Berkshire has done very well. We showed that graphic last week on Friday with Berkshire versus ARK. ARK Innovation, and we'll talk about ARK in a second, has returned 12% over the past years. Berkshire Hathaway has returned 103%. So a little bit of a difference, and a little bit of a difference for a reason. The reason being, slow and steady kind of wins the race sometimes. And you got to approach it in a way that actually makes sense versus approaching it in a way that's buying all these businesses just because you think they're going to go to the moon, even when they don't go to the moon. So Berkshire right here, 104%. Now it's probably like 107%, given Berkshire's up at 420 in the pre-markets. Arc Innovation, $50, up 12.19% over the past 5 years. Thomas says, Buffett and Munger have said that with small amounts of money that Graham and Dodd's strategy is better than the Berkshire approach. Yeah, and I mean, like, ultimately, they created a philosophy a long time ago. A lot of people get mad at Berkshire Hathaway for not investing in the way that, you know, the current reign of investors invest, right? Like, obviously, they missed out on Google and Amazon and nvda and Tesla and all these companies, right? But their approach has been their approach. And I think that's another big lesson, whether you agree or not with them, that it's important to take away. They fundamentally have a different approach and they respect that approach. And I think as an investor, it's important to have a philosophy, dude. Like, you might want, like, even if you're not in Bitcoin, I respect you if you just don't philosophically believe in Bitcoin and that's why you're not in Bitcoin versus, you know, any other reason. Because if you have a philosophy on investing, you're not going to get every asset. Like, it's just the way things go. But that philosophy actually gives you a style, a brand, and a mechanism. If you're just chasing stuff, like you're just buying Ethereum because it's going up, I mean, it's a more novice approach to investing, I would say. And I'm still not beyond that novice approach to investing, in my opinion, but I think I'm getting better at that. So I think everyone can learn from Buffett and Berkshire is that if you have a philosophy and that philosophy has sound principles, you know, you can make money over time in the broader markets. Okay, let's talk about earnings. We have a lot of earnings this week. I did not think we had these many earnings, and we have so many earnings. So we also have some news about startups and investments. So we'll talk about that in a second. Okay, so what do we have this week? This is all the companies, okay? A lot of names that I think are very interesting. Unity, big gaming company. They partnered with Apple. They are down from when they peaked at $49. Now they're at like 33. That was a big thing. Then they had that horrible like developer fee thing. The CEO had to resign. So their earnings is going to be big. And especially in terms of what they're going to say about spatial computing and the market they see for that company or for that era that's happening, right? That new era we're getting into when it comes to the Vision Pro. Then you got Zoom. Kathy says this stock's going to be 1,500 by 2026. If she's right, we will have missed one of the greatest returns in a 2-year period. By the way, that's her base case. Her bear case is $700 on Zoom by 2026. It is February 26, 2024. So there's about 2 years left for Zoom to go up 7x. I don't know if that's going to happen. Her bull case is $2,000. So again, we'll see if that happens. We obviously had Domino's today. They crushed it. Then we have a lot of retailers, Lowe's, Target, Macy's, AutoZone. Tomorrow before they open, those are going to be a lot of earnings to figure out, all right, are people still buying? Is the consumer still okay? You know, do they have enough money to be able to engage in sort of buying miscellaneous things? So those earnings are going to be incredibly important. Then you've got Bumble, which is a dating app. You've got Beyond Meat. You've got Lemonade, the insurance company. You've got Baidu, which is Google's China. That's going to be really interesting to see what they report, given all the turmoil going on in China. Then you have Duolingo, Snowflake, Salesforce, Monster, Papa John's, Best Buy, Zscaler, SoundHound. They're up 100% because of the NVIDIA investment. That's going to be interesting. The guy's been working 20 years to build this company. Now the company's worth $1 billion. All of retail cares about him because Jensen Huang invested. This is going to be his first opportunity, that CEO, to finally talk to millions of investors that are finally interested after 20 years about what he's built. So, I mean, there's so many different things that are going to be happening. Celsius is this week. We know a lot of people are interested in Celsius. They've got to put up some numbers to prove that the analysts were wrong about their market cap and their overall trajectory for growth. We got Fubo. A lot of companies are going to be reporting this week, and I'm going to try to be, covering all of these companies. I think we're going to listen to a call pretty much every day. Today, either it's between Unity or Zoom. We'll figure out which one we want to do in the market close. Tomorrow, honestly, I wouldn't mind listening to either Bumble or eBay. That would be an interesting one. After that, I think Snowflake is the one we should listen to on Wednesday, even though there's a lot of good ones. C3 AI, Paramount, all these companies, right? So there's so many calls to listen to this week and analyze. And it's still a heavy week in earnings. Still a ton of stuff that's going on. Any news on Fubo? Well, Fubo did sue Disney last week. I think the lawsuit's absolute nonsense. They're upset about that streaming service that Google is now building out, or not Google, Disney's building out with a bunch of competitors. I think that's not going to, that lawsuit's not going to go that well. So they're in a tough position right now. I mean, their stock's down because obviously what's the point of getting Fubo if you could buy this cheaper streaming service? So I think they're in a tough position, but we'll see on their earnings kind of what they say and the argument they're going to ultimately try to make. In terms of how do I sign up for the newsletter? I'll put the link in the chat. It's dailypalantir.substack.com. You should just be able to subscribe right there on the newsletter. what was I going to say? In terms of small caps, yes, small caps. I don't know what's going on with small caps, but I don't like, so there's two perspectives on small caps that I have. Remember, everyone thought small caps were going to take off to start the year because large cap had run up too much. If you look at the Mag 7 right now in the pre-markets, we got pretty much green across the board. The companies that are red are relatively small in terms of the red, even though Google's down 1%. We'll talk about Google in a bit. Of course, Google's down 1% in the pre-markets, but Mag 7 is still doing well. And they're putting up the numbers. So this idea that we need to have a rotation into small caps, I don't know anymore if we absolutely have to have that rotation. Remember, the consensus idea, kind of propagated by Tom Lee, quite frankly, was that if large cap had run up too much and the rallies, like Tom Lee's argument in December was like, okay, I need to stay bullish because we know Tom Lee's bullish. And I think he was like itching to find, how do I stay bullish after we just went up 54% in the NASDAQ? Right? How do we somehow still stay bullish? And I think Tom Lee was like, well, what hasn't gone up? And it was pretty obvious to him. He was like, oh, small caps. And then so he created this thesis that, well, so small caps are the next big thing. And he did all this historical analysis. Fundstrat started putting out all these numbers if they haven't gone up from the year 2000, yada, 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 yada. And they're like, okay, small caps is the next thing. I don't think they expected NVIDIA to go up 60%, Palantir to go up 45%. Microsoft to hit 420. I don't think they expected large caps to still have momentum. And so you got to ask yourself a question for anyone invested in small caps. Why would you be in small caps if large caps are still doing so well and they have the numbers? And really, a lot of these small caps are unprofitable. And until interest rates get cut, they're not going to be able to finance a lot of their businesses to the point where the market's willing to give them the capital to be able to grow. Now, the other perspective to that is, wait a second, large caps just can't go up forever. Like this thing just can't just keep going and going and going. So at some point, there's going to be sector rotation. And then boom, you've got IWM, you've got TNA, which is a 3x leveraged ETF on IWM. All of these small caps should start doing better. I mean, I don't know what's going to happen. I mean, quite frankly, I'm torn on this because, yeah, like I said in December, large caps are going to have to take a break. And pretty much everyone thought that, and they didn't. They're not taking a break. NVIDIA has not taken a break. NVIDIA added, what, $700 billion in market cap, $600 billion in market cap in 2 weeks, 5 weeks. So I don't know. I mean, if we do get a break, yeah, maybe the small caps will happen. If we get a large scale pullback, let's say 5 to 10%, which is, it happens throughout the year. Small caps are getting hit even harder. Small caps are not going to survive if we get a pullback. I don't think that money is going to rotate into unprofitable companies when we get a pullback. No, I think that money's going to be scared. So I don't really know how small caps are going to perform. However, I do think there are some small caps that have catalysts behind them, like a Robinhood, that will perform very well. But those you have to be kind of selective on versus just betting on the entire industry themselves. So we're going to see. We're going to see how that kind of plays out. Nick says small caps are subject to CPI inflation data period. High rates sink small business revenue. Yeah, it's really that simple. And so Tom Lee's argument was like, if we're going to get rate cuts soon and large cap has run up too much, the appetite is going to change. Boom, you have sector rotation. But that hasn't really happened. And if that hasn't really happened, then I don't really know if small caps necessarily rally just yet. Right? It's going to be tough to see if that happens. Someone says, where is Amit's merch? I don't have merch. So we're not doing merch. I think maybe one day we'll have merch, but we don't have merch. I am working, as you guys, I told you guys last week, I've made significant progress on the software that I will be launching. It's a SaaS product. It will be specifically for Palantir investors. It will cost $42.69 per year to access it. And what I'm going to do, the tentative date, don't hold me to this, but the tentative date is March 8th. That Friday, it seems like we're going to launch. We made a lot of progress over the weekend. This thing is getting really fun every day when I'm playing with it. And I think people will enjoy it. So March 8th, what we're going to do, guys, is at the end of the market open, think of it as if I'm pitching it to you guys. So it's not like not a pitch for you guys to invest in it. It's a pitch for you to spend $40 a year to buy it, which I think the value of it will far exceed the cost, in my opinion. But you guys will be the judge and jury of that. So it'll be really fun. March 8th, probably like 10:15 a.m. We're going to do an hour-long presentation. I was working on the slide deck this weekend. And I think it'll be really fun. And I'm going to present this idea not only as a business, how I see it scaling, but also why I think it's just a good product to have if you're interested in Palantir. So that will March 8th. We'll likely do that pitch, and we will officially launch that business, and that'll be fun. But no merch. We're not doing any merch. Now, also, I got one of the best domain names for that product. I think you guys are going to love the domain name. Like, it's a .ai. Motherfucking GoDaddy charged me hundreds of dollars more than a typical .com for that. I was like, really, guys? Really? We're going to charge me that much money for a .ai? But they did. And I got the .ai, and I think it's going to be fun. Allen says it's a Tanner moment. Well, the one thing I will say is it's not a course. I know Tanner launched the course, and I love Tanner. He's a good friend of mine, but I just philosophically don't believe in selling courses. I think I just can't do it, dude. It's like it's selling information that you can get for free on the internet. So I have nothing against it. I just personally would never do it. This is a tech product, and it's a tech product that's so cheap that I think it's gonna be well worth the cost. But we will see how you guys react to it when I pitch it. All right, let's get another look on Reddit going public. That company is going to be public, I think, in the next month or two. They had some controversy. By the way, a TechCrunch reporter reached out to me because she wants my opinion on the Reddit IPO. TechCrunch, for those that don't know, is a very big publication in Silicon Valley and the media space. And I was like, okay, but I kind of want to tell her, like, I don't use Reddit, but I didn't want to propel her from not like getting my opinion. So when she calls me today, I'm just gonna be like, yeah, so what I think about Reddit, given my experience using the platform, and I really don't have that much experience using the platform, but she wants my opinion. So I'm going to be in some TechCrunch article that will come out soon. I don't know why the hell she wants my opinion, but she wants my opinion. So the thing about Reddit is they listed Wall Street bets as a major risk to their business. So let's get a little bit of insight on that, and then we'll have the market open in a couple minutes.
Finally go public last week, the company's S1, and it announced that some Reddit moderators and users are going to have the opportunity to participate in the listing through a directed share program. And Redditors' participation is listed among the company's risk factors at the same time, saying it could result in increased volatility in the market price. Joining us right now to discuss this is Tasty Live CEO Tom Sosnoff. He's a shareholder in Reddit, having invested through the secondary market last summer. Good morning to you. As you read through the S1, what did you think?
I kind of felt like Reddit is one of those companies that is going to do better as a public company. I think they've been private for a little too long. And I think as a public company, they're going to get kind of that, that kind of kick in the butt that they need to maybe turn the corner towards profitability. That's that spoken like a shareholder.
Spoken like a shareholder. What do you think would be the...
Someone in the chat said he can't wait to offload his shares. I so agree with you. All these private guys, dude, they can't wait for this shit to go public or for them to just dump it on retail.
The inflection point. I mean, it is true. There's a company 19 years old. It's not a startup. It's a very mature company for 19. Right. I mean, it's 19 years old, still not profitable. So what does that say?
I don't think, I mean, they've obviously raised a lot of money. They're not profitable, but they've been able to survive and thrive. I mean, their user base is massive. And they have a really strong demographic, like a monetizable demographic. That's what I like about Reddit. I just think it's one of those companies that needs that kind of needs to go to the next level. And I think taking them public will almost force their hand to learn how to be profitable. I mean, they have enough users. They should be profitable.
What do you think about the correlation and connection and maybe risk factor at the same time?
Okay, we got about a minute until the market opens. Now, what he says about users, I don't really agree with. They don't have a lot of users. I mean, like 73 million users is good, but guys, this is a company that started in 2005. I mean, Facebook is at 4 billion, and I know they're not Facebook, but if you can't get close to a billion, I mean, 73 million, or sorry, they have 200 million weekly active, 73 million daily. Like, that's just not the level I thought Reddit would be at. So, I mean, yeah, they have a lot of users, but that's one of the reasons they're not necessarily profitable. And they don't have that many users. So we'll see. I think they're going to be valued at about 5 billion, which isn't the worst valuation for a company doing about 900 million in revenue. They're losing 80 million bucks. They're probably going to be profitable soon, but I just don't know what the long-term, growth prospects are of Reddit, which is why I will not be participating in the IPO, but obviously we will be covering it here on this channel. All right. It is Monday, February 26th. We are back once again. Thank you, everybody, for being here with me from the bottom of my heart. The stock market, once again, is now open. Wake your ass up. Here we go. S&P 500, 508. Remember, every analyst said 510. We're basically there. And it's not the end of the year at 508 right now on the S&P, up about 0.07% to start off the day. Berkshire halfway, 421. It's up about 1%. It was up about 4% in the pre-market, so it takes a little bit of a tumble as soon as the market opens, but still up about 0.71% on the day, and now 420 up 0.7%. Robinhood up 2% on the day, $14.76. That buy-side pressure is coming into the market as it's opening now. $12.9 billion market cap, $6.5 billion in cash, $14.80, 2.21% up on the day. Ethereum, $3,075. Nvidia opens up the day up almost 2%, $800. It's up 12 points. The market is not stopping Nvidia. You would think that there's some selling pressure that's going to come in and people are going to take some profits. And nope, people are ready to go. and nvidia continues to go higher. Palantir, we'll talk about Palantir in a second after we get through some of these stocks. Palantir 2310 up about 0.76% on the day. Rivian is at 1015. Now, one interesting stat about Rivian that I found out over the weekend, they have 9.6 billion in cash. Their market cap is literally 9.6 billion. So this is a company you are buying at cash. Is that kind of attractive? Yeah, but still, it's Rivian and their earnings kind of sucked. But the valuation, I don't think anyone can argue necessarily with the valuation at this point. Now trading at cash, now you have to argue about the qualitative factors about the company, which is why the stock market is so cool, because it's not only the quantitative, it's about the qualitative thesis and narrative of the story. Walmart did do a split today. So now Walmart you can buy for $58 a share. It is at what I think it's at all-time highs now. It was at 170. They did a 3-for-1 split. So Walmart's now at 59. By the way, if nvidia really wants to have fun, I think they should split the stock 5 times. I mean, get this thing down, or 10 times, get it down to $80 a share. Now it's going to create a lot more volatility in the stock, a lot more speculation in the stock. But if they want to have some fun, they split that bad boy. We're going to have a hell of a time with nvidia. Robinhood, $14.95. There you go, up 3.25% on the day. So we've got Robinhood trying to make a push for that $15 level. We'll see if we can get there. Right now, $14.95. And we'll get back to that, see if they can actually get there. Roku, $64.77. Meta, $484. That's closer to their all-time highs at $494. Amazon, $175. Big tech continuing to do well. Look at the Mag 7. Wow. Google's the only one that's red. Wow. Google is the only one that's red on Mag 7. Absolutely incredible. Absolutely incredible. Google is the only one that is red, and it's red by a lot, dude. It's down 2%. Down 2% is not, for a big tech company, that's tough, being down 2% on the day. Obviously, a lot of controversies happened over the weekend with Google. I think a lot of people are just done with it and they're dumping their shares. To me, Google has enough cash where they can weather this storm, give a dividend, do more buybacks. There's a ton of financial engineering they can do layoffs. But the core thesis of the AI not really being the best or the most truthful, you could say, is what's getting a lot of people pissed off. NVIDIA at 804, Tesla up about 2% of the day, 194 right now on Tesla as well. CLSK, CleanSpark, let's go to all the crypto companies. I think that one's doing well. Crypto, oh wow, look at CleanSpark, up 7%. They're doing well. CleanSpark's up 7%. Marathon has earnings today, by the way. That's going to be important. Coinbase is up 4.6%. Robinhood, $14.95. Bitfarms is up 4%. MicroStrategy. Oh, how did I forget to mention? Michael Saylor bought 3,000 more Bitty coins at an average of 51,000. They now hold $9 billion worth of Bitcoin that they bought for $6 billion. They're sitting on a $3 billion profit. Their average price is 31,000 for Bitty coin. And Michael Saylor just picked up 3,000 more over the weekend. So MicroStrategy now has a lot. Obviously, MicroStrategy is up 2.65%, $705. Hut 8 Mining is up. Iran is up. Marathon is up 5%. Riot is up 4.65%. Well, Robinhood, $15 on Robinhood. $15 on Robinhood. It is up, folks. It is up. Robinhood is up. Oh boy, Robinhood is up. We have our first 107% gain in these stocks. Here we go. This is what I'm looking at right here. This is the portfolio on the Robinhood position. We have 350 of these spreads. We are up 102% on this position for Robinhood. It's not bad, man. The company is executing 1509 now, up about 4% on the day. I think the market kind of figured out what we knew. I think the market kind of figured it out. So this position right now is up about 92% on the day. Robinhood, $15 today. Not bad. Not bad at all for Robinhood. And look, they're continuing to execute and they're doing what they have to do. I think the market realized that this is a story that's happening. There's probably going to be some sell side pressure, but above 15, dude, Robinhood, it was at $8 for 2 years. And so it's kind of in that breakout phase. And now it's just a question of the narrative continuing to maintain higher and for people to understand what's actually going on with this company. So Robinhood doing very well. And then let's go back to Palantir. Where's Palantir doing? How's Palantir doing? Palantir is up 2%. Okay, so let's talk about Palantir. I want to actually talk about Palantir as well and some realizations I had in regards to Palantir and NVIDIA. So let's talk about Palantir up about 2% of the day. Okay, so here's what I tweeted last night, and I think this was a big thing that I realized. I wrote this in my newsletter, and I wanted to put it out here. If you're not following me on Twitter, I'll put the link in the chat. Please make sure you follow me on Twitter. Okay, so let's read this on Palantir. One of the things I realized about Palantir and NVIDIA is why NVIDIA meant a lot to Palantir. So here's the tweet. We'll just put it here in the chat. Does Hood count cash count any deposits? I don't think so, Thomas. I have to check on you for that, but I don't think the cash that they get in deposits from customers is actually the cash on their balance sheet. I think that's totally separate. Like the cash on their balance sheet has nothing to do with the actual cash on the in the deposits they get from customers. Okay, so when Nvidia went up, Palantir went up about 5%. Right? When Nvidia went up, Palantir went up about 5%. Now Palantir has not retained all of those gains, but still Palantir was able to get some of those gains. Now, why is this happening? I believe, as I said right here, Nvidia continued to maintain their gains because the street thought that what Jensen said has been true. Why did the broader market rally off one stock, and why is it continuing to do well because of this one stock? The way I see it, AI increases productivity, operating margins, and revenues for companies that implement it correctly. It also decreases costs. This is important for public companies because if they decrease their costs and increase their revenue, boom, their earnings should do better, so investors should buy their stocks, which makes sense for why random companies are up, because the market feels that GPU demand, which is basically AI demand, is continuing to surge, which means we will eventually see the increase in productivity, which is the core benefit of AI, at such a scale that every company, whether they're healthcare, logistics, media, supply chains, they're going to get more efficient. They're going to produce better results. And as a result of that, the S&P 500 is up on that expectation. However, Palantir sits in the middle of all those companies actually implementing AI. So it's not, you can't just say, oh, NVIDIA is going up, GPU demand is going up, the market wants AI, therefore every company is going to do well over the long term. You need a software that is the intermediary between the GPU demand and the companies actually operationalizing that need for demand, that need for AI, to be able to make their enterprises more unique. So just because there's more data center demand does not mean that companies will be increasing productivity. You need something like an AIP. So NVIDIA is showing the market there's massive demand for AI. Palantir, in my opinion, this is kind of the main realization I came over to the weekend and got to put into words, is capitalizing on that demand because companies will need something like AIP or Foundry in order to implement software that makes AI real, i.e. increases revenue and decreases costs. It's a massive market, obviously a massive market. NVIDIA just showed us the market is only growing, and Palantir wants to be a big player in this market, which is why I think there is more room for Palantir to keep going, because NVIDIA is showing the world that Palantir can keep growing. 2350 right now, 2.3%. They're showing the world there's more demand for AI, more software, and that's why Palantir is eventually going to be seen as a player that can capitalize on the demand. Robinhood, $15.09. Berkshire Hathaway, $428.66, up 2.74% on the day. NVIDIA, $800, up 1.5%. Rivian, up 1.64%, $10.25. Now it hit a bottom of about 10.07 last week. Google continuing to go down 1.93%. Where is CleanSpark? CleanSpark is up 9.35%. CleanSpark's up. CleanSpark is up. PayPal, is PayPal getting any of this love? Of course not. Why would PayPal get any of this love on? There's no point for PayPal to get this. So PayPal right now, 58.57 here on PayPal. Lunar, this is why we say don't chase on this channel. Okay, this is why we say if you're going to drink your alcohol, you don't drink it with a chaser. It's okay. I know I've said that joke 15,000 times in regards to Lunar, but it's true, okay? You don't chase. This thing's down 30% this morning because it never should have been up 350% to start the year. So for anyone who got into Lunar, I'm sorry. It's an expensive lesson. I've had that lesson many times, but it's just something you got to deal with. It was, you can't be chasing this stuff. Robinhood, $15.19. It's up 4.875%. It is not stopping. It is not stopping. It is continuing to go higher. And there you go. It's up about 5% on the day. I think the market figured out what the hell is happening with Robinhood, and that's why it's continuing to go up. Wingstop is up about 2%. Super Micro, 1.6873. SoFi, 830. They're up 1.7%. QQQ, 437. Carvana, they're up 2%. They were up 30% last week. Affirm, 3716. Amazon, 175. Meta, 484. TNA, that small cap 3x leverage ETF, that's up 0.27%. And then Google down 1.97%. Where's ARM? Wow. ARM's up 10%. I mean, look, ARM is the valuation I will say actually feels kind of ridiculous. NVIDIA's PE now being at 35. You can't even say NVIDIA is ridiculous. I mean, if you say NVIDIA is ridiculous, you're kind of just not looking at the numbers. I don't think NVIDIA is ridiculous. But ARM doesn't have the growth to be able to support that. But $150 billion market cap now in ARM. CleanSpark, $18.07. They're up 10% on the day. So there you go with CleanSpark. That is up. DPZ, Domino's. Where's Domino's? Wow. Market gave Domino's 8%. Not bad. They were up 6%. Market really liked their earnings. Again, $1 billion in buybacks, increased the dividend 30 cents, beat on EPS, beat on revenue by 100 million, beat on EPS by 8 cents. That'll do it for you. People are buying pizza. People are buying pizza. Thoughts on TSM? I think TSM's great, but at the end of the day, they've also had a decent run over the past year. Now, their demand is not like NVIDIA's demand. It's not really a one-to-one correlation. They are a crucial player. I don't know if this is the company I would get into, though, if I'm trying to get heavy into semis, which brings me to a point. And I've got to make this point. And I think I want to run it through you guys because we're doing this on the public portfolio. I think in the public portfolio, which is $18,500 strong, the first purchase we should make, I honestly think this, is SMH. Why? This is the semiconductor ETF. These are all the companies in the ETF. If we're doing retirement, we want something that compounds and something that's not risky, right? And I'm not going to buy it today, but let me know what you guys think. And maybe by the market close, we'll figure out if we want to buy it. This thing's going to always be expensive. I don't think we can time this thing. It's up 22% year to date. Like, it is what it is at this point. Like, we're not going to wait for this thing to come down. I think we buy 10 shares of this ETF as the first thing in the YouTube retirement portfolio. Because if we want exposure to semis, NVIDIA, AMD, I definitely don't want to buy the individual equities because, I mean, that's just a little scary buying the individual equities. But an ETF that is kind of balanced out, I don't think that's the worst approach. So let me know what you guys think. And maybe by market close, we make the first purchase of 10 shares. It's going to be about $2,000 of the semis ETF. And that'll be the first purchase of the public retirement portfolio. Maybe that's what we do. Or do you guys think an ETF is playing it too safe at 26 years old for the retirement? I don't know. Let me know what you think. And we'll see. SMH or QQQM. Yeah, I think we got to figure that out. I do think I want the retirement portfolio to have some ETFs because I'm so concentrated in equities and I have no ETFs. And I was talking to my boy Jose on our Chip Chat podcast on Friday. And he said every spare dollar he has when he doesn't buy an individual equity, he buys SMH over the SPY. And I was like, really? You buy SMH? He was like, yeah, like, why would I buy SPY? There's only 7 companies that really matter in SPY. One of those companies out of the 7 is the one that's leading everything, which is NVIDIA. So I just rather invest in that entire ecosystem versus just centralize my money into SPY. And I was like, that kind of makes sense. Like that. And now I have to do more research on how cyclical the demand is for semis. I think that argument is actually not that good, by the way. I've been doing more research on it. But I think semis is not the worst ETF to get into if that's, a strong hold retirement play. Mario says, don't buy at all-time highs. I mean, look, dude, this is the problem. Like, I don't want to. I hate it, but I think that's something you DCA into because at this point, NVIDIA is not stopping, dude. I mean, like, and if it does have a little bit of a pullback, that's fine, but I don't know when that pullback happens. Now, granted, I do think in March when ARM dumps their shares on the public market, maybe AMD takes a tumble. That's a better time to buy it. So we'll see. But it's going to be expensive no matter what because this entire industry is just moving so fast. CleanSpark, 12%. Now, people are saying, why is CleanSpark up 12% and Bitcoin's flat? I think the market is predicting. It's a very simple argument. Ethereum's running. And the market's realizing when Ethereum's running, and we talked about the whales that are accumulating and getting their money off exchanges, that means the entire market is getting ready to run as we're seeing this alternative asset outside of Bitcoin start to pick up. And if that's the case, then eventually Bitcoin will pick up as well. I mean, it's picked up pretty nicely this year, but we will see it keep going. And investors are just front running CleanSpark. Now, that may mean that CleanSpark's a little bit overvalued right now. That's fine. But in the grand scheme of things, if Bitcoin does what it needs to do, then CleanSpark will be fine. Google is about to fall below 140. It is 62 cents away from falling below 140. Google has been a disaster. It has been an absolute disaster. It's been pretty bad. The Olin podcast, if any of you guys caught it over the weekend, they absolutely demolished Google. I mean, so David Sachs said, what would you do if you were the CEO of Google? And he said, I would fire myself. Like that's what I mean, the sentiment on Sundar Pichai has not been this bad ever. He's been one of the most not beloved CEOs, but like you didn't have an opinion on the guy. The guy was just the guy. He was just the CEO. Like no one really cared, right? Same thing like Microsoft. I don't think people have that much of an opinion of Satya Nadella. They like him, right? Now Jensen is seen as like visionary. Elon's like super political. And people hate Zucks for hating Zucks, even though he produces good results. Sundar has just always been Sundar, and now people are starting to create an opinion that we don't like Sundar. And as a result of that, I don't know. You're getting a lot of problems when it comes to where the market is perceiving what Google ultimately will end up as. Amazon 175, Roku 65.10, TQQQ up today 59.78, and then Coinbase. Look at that. Coinbase is up 7%, $177 right now with Coinbase. Swag North says, Amit, is this still a good time to DCA into Robinhood? Okay, so let me break this down because I know a lot of you will say, well, of course Amit's going to say yes because he owns Robinhood. He got in at a very cheap price, so he's going to say yes. There's still momentum here. I don't want that to be the perception, so let's just look at the numbers. Let's do this really honestly. Market cap is 13.15 billion. The cash on hand is 6 billion. So let's subtract cash because that's like the tangible book value, right? 13 minus 6, you're paying $7 billion enterprise value for a company that's growing 37% year over year, 44% growth in net deposits, tripling their gold subscription numbers, has transformed from a stock frenzy trading app in 2021 to a retirement portfolio that now has $1.4 billion in assets, has $100 billion in assets under custody. The last time that happened was 2021, and is GAAP profitable. If all of that is not worth $7 billion, I don't know what the fuck is worth $7 billion in this market, dude, especially when everything's going to the moon. So from that perspective, yeah, I think Robinhood's still very, very, very cheap. I think $20 is approaching more fair value. And then if Bitcoin and crypto does what it needs to do, Robinhood's going to, I mean, like the crypto revenues, and don't take my word for it, Q2 2021, $233 million in crypto revenues. That hasn't happened. We're at 43 million because crypto hasn't really come back because we haven't had retail enter the market, which actually transitions me to my next point. So that was a really good question. This is my next point about what's going on right now in the broader equity market with retail. Take a look at this. Take a look at this research, this due diligence that I did using, ironically, Google this morning, Google Trends. Okay, I'm going to walk you through a story in 3 parts. Here we go. This is the NVIDIA stock sentiment in Google Trends. What do we see? It's pretty high, right? What is this? This is what, February 2024? It's at an all-time high. NVIDIA stock, that's the search term. Okay. Then let's do NVIDIA stock on Palantir stock. We'll compare them. Palantir is nothing really compared to NVIDIA. I mean, it actually peaked way earlier, back in like 2021. So there was way more hype around Palantir back then. But now it's up there, but it's not up there as much, right? It's not up there as much. Okay. Now let's look at the next story. The next picture is the term Bitcoin, NVIDIA stock, and Palantir. This is the most fascinating shit I've seen all morning. I woke up at 4:30 a.m. today. Look at this. I tweeted this at 5:32 a.m. I tweeted this at 5:32. And 16 minutes later, I was at the fucking gym. I was at 4:40, at 5:40. I just have to remind everybody I went to the gym today. Look at this. Bitcoin in 2018, 2017, and then even 2021. Look at that chart. And that's compared to NVIDIA stock and Palantir stock. Now, Palantir's run, you could say, all right, whatever. NVIDIA has run more than I think anyone can imagine after a bull run in 2023. And Bitcoin levels in terms of interest they're not even comparable. It's like you can't compare the yellow chart to the red and blue. What does that mean to say? I don't think retail has come back into the market, guys. And I know all 1,300 of us here are retail, but we're, I think, a little bit more sophisticated retail in that we're actually, we've been in the markets for a while. We're viewing content on the stock market. I'm talking about retail that comes in just for the hell of it, like my mom making $1,000 off AMC. I'm talking about that type of retail. That type of retail is not here. So what does this mean for Robinhood? Well, it means that when that retail comes in, they're going to download Robinhood and they're going to start buying assets on that platform, which is going to increase their revenues. What does that mean for Bitcoin? That means Bitcoin's probably going to get more momentum. Ethereum's going to get more momentum. What does that mean for, NVIDIA and large caps? Maybe those people that randomly come into the markets, like my dad for the first time, he knows what Google is. My dad is sitting on 20 shares of Google at $100 an average. Why? Because he doesn't know that many companies, but he knows what Google is. Those people are going to come in and they're going to start buying more of these equities. And I think that's going to lead more fuel and momentum in this bull run we're having in 2024. Now, NVIDIA 791 selling off a little bit. Robinhood selling off a little bit as well, below $15. So people are obviously taking their profits. I think that's healthy. That's probably going to happen. Semiconductor stocks down for today. SMCI is down 1%. AMD is basically flat. NVIDIA is up. ASML is up. ON is up. ARM is up 8%. So people will take their profits. But I think when crypto really leads the way, this thing is just getting started. I think this thing is really just getting started. Sam says, I think only sophisticated retail in the markets, and we have that trauma from 2021, so we keep thinking we're not at the top or we're not even close. We tend to be too smart for our own good sometimes. Sam, I'm so happy you said this. You're right, dude. You're absolutely right. I think all of us here, I would argue we are more sophisticated retail investors. A lot of us, we're dibbling in Palantir at $8-9. We're a little bit more sophisticated than the average retail investor. And as a result of that, we think we're at a top because we've seen the market go super high. But in 2021, I don't think we remember how crazy it got. Dude, a picture of a rock was selling for 2.5 million. A picture of a fucking rock was worth 2.5 million. That OpenSea raised $300 million at a $13 billion valuation. The company's worth like 95 million now. That level of speculation is not back in the markets. And when that level of speculation is back, we'll know. And you can't say NVIDIA is speculative because NVIDIA's at a forward PE of 35. That's basically Apple's PE, and they're growing 120% year over year. So you can't really say these valuations are based on retail hype and bubble. And really, it's not even retail. It's a lot of institutional investors that are buying up these assets because, quite frankly, most of them missed 2023. You know, if you're not the Tom Lees of the world, you missed out on the run, and now you got to get exposure. And as a result of that, that's why I think maybe there's more room to run as these companies put up the numbers, and we're at higher interest rates. We're doing all of this in a very fiscally controlled environment, whereas in 2021 it was anything could go. So I do think we have more room to run as long as these companies keep putting up numbers, and as long as investors still feeling that there's not better places where they can allocate their cash. And on top of the macro, and we'll talk more about the macro in a bit, but we're not getting macro data that's necessarily bad to show that there's some upcoming recession. We'll talk about the things we're looking at this week. But you put all that together and you've got a market that can probably do pretty well. NVIDIA right now, $787, Robinhood, $14.97, Domino's, $472, Taiwan, $71.28, SMCI, $838, SMCI down about 2.4% on the day. Amit, can we talk Rivian? The stock is getting cheap. If it runs below $8 a share, is it worth taking a small flyer position? Okay, so I'm having the same opinion on Rivian, that at this point trading at cash is maybe stupid, but I don't want to, like, Robinhood trading at cash was stupid because I understood the business. I can't say Rivian trading at cash is stupid because I don't understand the business. So I'm going to spend this week trying to understand Rivian, because when something's trading at cash, look, it's at least worth a look. All right. When you're literally buying a company that has the same amount of cash as their market cap, you're taking very minimal risk, but the market is giving it that valuation for a reason, which is the qualitative part of this Rivian thesis, up 30% on the day. So, I mean, I can't say if Rivian's worth anything right now. If it falls below $8, I think it would be worth, I mean, at that point, they would have more cash than their market cap. And so, but I'll take a look at it this week, and hopefully by Thursday, Friday, I'll come up with some due diligence and see if there's anything meaningful here. Now, Nick says Rivian loses 40,000 per car. See, I mean, look, that's an argument, right? If it loses 40,000 per car, why would you bet against Tesla, which is the clear winner here? So these are things we have to kind of compare and concern when we're looking at companies that trade at cash. When Robinhood was at $7 trading at cash, I mean, there was some fear in me around, okay, it's trading at cash. The market's obviously discounted it, but the fear seemed, from the market's perspective, a little bit more irrational, which gave me the confidence to buy some. Whereas, Rivian, I don't really know what the market sentiment is about this. I got to do more research on it. Cedric says it won't have any cash soon. This is a good point by Thomas. If a company loses money, it doesn't really trade at cash. Look at where the cash will be in 2-3 years. That's actually a good point. Robinhood was teetering on GAAP profitability when they were trading at cash. Rivian, that's a good point. If they're losing money, they don't really trade at cash. I never thought of it like that, because they're going to lose the fucking money. That's actually not the worst point. All right, so we'll keep doing due diligence on Rivian and see what happens. S&P 500, quick stat for you guys on this one, and then I'll read off some of the macro things we have to look forward to this week. S&P 500 officially has $500 billion under management. That's a lot. That's a lot. This is the first ETF to have $500 billion in total assets under management. This is the ETF right here. SPY surpassing $500 billion in total assets under management last week. I don't know if this is the first ETF to have $500 billion. I might be wrong on that, but I think it's one of the few that have $500 billion. It's actually, that surprised me. I thought the S&P 500 will be worth a couple trillion. Like, I consider the S&P 500 as like the biggest ETF in the world. And I might be right about that. It might be up there, but I forget there's a lot of other ETFs. Like, to me, the SPY is the market, which, yes, it is the market, but there are a lot of other ETFs that exist. And SMH is one of the first ones I'm really starting to understand at a deeper level. But there you go. Money's coming into the market. Money is coming into the market. How long do you think before Lucid goes bankrupt? I have no idea, dude, about Lucid. I mean, that's just a train wreck. I know a little bit more about Rivian than Lucid, and I think Rivian's management themselves gives me a little bit more confidence to even think of researching them. But Lucid, the Saudis are backstopping everything, and the CEO took like a big pay package or something. Like, why are you taking a big pay package when your stock is in the gutter? Like, that's not the right way to approach this. Let's get a couple of different updates. First, let's get an update on Berkshire Hathaway and their cash, and we'll keep going from there.
The weekend, in case you missed it, Berkshire Hathaway reporting a 28% jump in the operating earnings in the fourth quarter, helped by an increase in insurance underwriting earnings and investment income. Berkshire's cash hoard grew to $167.6 billion. It passed a record level from the prior quarter. In his annual letter, Warren Buffett saying, there remains only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over by us and others. He said there were basically no companies outside of the country that could move the needle. This was the first earnings season report since the death of Charlie Munger, and Buffett devoted much of his annual letter at the beginning of it praising Munger's role in creating the firm, calling him the architect of the company, called himself the general contractor. Buffett said at this year's annual meeting he would take the stage this time with Ajit Jain, who runs their insurance business, and Greg Abel. He also made some interesting comments about the electric business, the regulations around the electric business, and also the train business, and just how capital intensive that business was.
Okay, so here's the question again on Buffett. What stock do you think this guy is buying? Put it in the chat. I mean, I at this point have no clue. I think it's a financial, but put in the chat what you think Buffett would be buying. Here's another update as well, and we'll look at what you guys think. BYD is launching an electric supercar that could take on Ferrari for $233,000. There it is right there. Interesting. I mean, BYD in general, obviously creating some competition for Tesla in China. It's interesting because Tesla's not going after the supercar market, the Roadster and all that stuff. I mean, that's not been their biggest concern. Now they actually, it's funny. Tesla was trying to create a $25,000 car, and you got BYD trying to create a $233,000 vehicle to be able to supplement the broader markets. And it just seems like both of them have fundamentally different priorities. Now, at the end of the day, obviously, one of them is scaling a lot more faster, but in China, it's a competitive market, and maybe they're realizing, hey, if we can offer a different brand of car to a different consumer, then maybe there's another growth opportunity there for the luxury vehicles that exist in China. A lot of people in the chat are saying SoFi. I don't think he's buying SoFi, dude. I don't think it's Tesla. I don't think it's Amazon. I don't think it's SoFi. He has a little bit of Amazon. I definitely don't think it's Palantir. If it was PayPal, I think that's the best bet, but that's probably not it. SoFi would be an interesting one, but again, that's a bank. And my argument against him buying a bank is that he could buy TFC. He could buy more Bank of America. Like, you don't need to buy a company that's barely profitable. And like, yeah, it's growing fast, but like it's not. It's SoFi, right? It still has a lot to prove. Whereas there's all these big banks out there that have proven themselves, and he doesn't invest in these small, fast-growing, high-tech companies with all these different variations. He buys established businesses, right? So I don't think he would be buying SoFi. I think there would be some other stuff. Okay, let's look at some of these equities. S&P still 508. IWM, that's up about almost 1% of the day. 201. Berkshire Hathaway 422. Ethereum 2660 up 5%. ETH, so that's a way to get exposure if you don't want the Ethereum ETF. Google 141. We'll talk more about them in a second, down 2.6%. SoFi up 2.47. Affirm is up a little bit. Mercado Libre still down from their earnings. I didn't think their earnings were that bad, but I think same thing like Palo Alto Networks. They got priced to perfection. They're down about 12%. Since their earnings, Roku 65, that's finally up about 2%. That had a tough week last week, especially when Walmart acquired Vizio, which is kind of a competitor in the OTT ad space. Palo Alto Networks, that's up 5% of the day. That makes sense. That thing fell down to like 275. Probably didn't deserve to be up there. So that's about 8% up from its earnings fall. Coinbase 7%. Wow. 7%. SoundHound down about 1%. TFC flat. Enphase is up 2%. SolarEdge up 0.32%. Zoom, they've got earnings. That's up. Oh, wow. Celsius trying to crack 65. 64.84. 1.23%. I hope Celsius earnings is very good for shareholders. I like the company. I do not like the product. I just cannot get behind the drink. But Bay Ray, he texted me over the weekend. He's drinking like 4 of those purple Celsiuses a day. And I'm just like, I don't know how people drink it, but they're drinking it. And they're going to probably show increased growth in Canada and Ireland. And they're going to also show that their market cap maybe isn't that insane, even though it's 1/5 of Monster's market cap. KRE Regionals 48.15. XLF is close to all-time highs, $40.53. That's the financial sector ETF for banks. That one's doing well. Let's go to Costco. We haven't looked at Costco in a bit. Costco is 740. Okay. Wow. I didn't even know it was above 700. It's been a while since I looked at this one. C3 AI, where they're going to be producing results this week. They are 2642. So they've been kind of flat in this 25 to 29 range for a while. And so they're at 26. We're going to see what happens on their earnings. CleanSpark, $18.48, up 12% on the day. Now, the macro data we're looking at this week, there's a couple of things. Number one, we're looking at new home sales data. That's going to be incredibly important because we're having a housing shortage. Consumer confidence report, that's going to be important. Initial jobless claims, that's going to be important. ICM manufacturing data, that's going to be really important. Remember, above 50 means that we're expanding. Below 50 means we're contracting. And then core PCE, I believe that's going to be out on Thursday. So we do have 5 important reads of data this week. I don't know if any of those pieces of data are enough to really hurt the market, maybe PCE. Palantir right now 23.37, but we are going to have a ton of data that's coming out this week to let us know what's going on in the markets. Robinhood chilling out at 14.94. So people took profits when it hit 15.22, still up 3% on the day. Li Auto is up 15% on the day. Oh, wow. 15% is a lot. This is another Chinese. Oh, they had earnings. I forgot. They had earnings. So their earnings must have been really good. $40 right now, up 15% on the day. And then where's Tesla? Tesla's up. Wow. Tesla's up 2.4%. Maybe Tesla's getting a little bit of a bump from Li Auto doing well. NVIDIA right now, 788 on the day. The World's Got Talent said we're doing good at Costco. I know you work there, sir. So there's always people. Dude, Costco has always been such a special place. Like I've gone there my whole life. It's like one of those places where I don't know. I just like when you shop at Costco, it's like very nostalgic. Like it's just been a staple of my grocery habits since I was young. Right. I think we got my mom started taking me to Costco like 2010, and so for 10 years we've really been shopping at that place. I couldn't imagine shopping anywhere else, quite frankly, to get like wholesale groceries. So it makes sense that Costco is continuing to build loyalty. Oh, we didn't talk about Tom Lee. Tom Lee had some thoughts on Friday. I played this on the market close, but a lot of people weren't there. So let's hear his updated thoughts on what's going on in the broader markets. And then we'll keep going from there. Bay Ray says he only drinks 2 Celsiuses a day. Okay, it's not like that's any worse. Here we go.
Sentiment is pretty stretched. Everybody's long. You really think there are that many people who are still non-believers in this? Now, I know there are some out there because I hear from them, but you really think there are that many?
Yes. I mean, I think there's a couple of reasons. One is many people think the stock market's very concentrated and the FANGs or the Mag 7 are expensive. But, NVIDIA's free cash flow yield is 3%. It's the same as the S&P. It's actually not expensive. And I think there's still this inflation mindset that inflation is stalling or could come back. And so investors are kind of inclined to short the market. And I think the best evidence that sentiment's still pretty negative is I hear people talk about the market being expensive, but outside of the FANGs, it's trading at 15 times forward. I mean, that's never been an expensive multiple. It's just people look at the price appreciation of the market and because they may not have participation, think it's a bubble.
You don't have any concerns at all that it might be, especially, stocks like NVIDIA, which, as we say, seemingly, went from 1 trillion to 2 trillion in market cap, quote unquote, overnight?
I mean, in some ways, I think, stocks rise rapidly when either estimates change or they want to reprice the future growth. What's interesting is NVIDIA's free cash flow was $7 billion a year ago. It's now close to a $50 billion run rate. So it's gone up by, 7 times, and the stock price hasn't risen by that much. I don't think we will have a bubble until the consensus declares there's no bubble and there's no risk. And then that's when we are likely in a bubble. But I think a lot of folks raising the prospects that this is a bubble means it's still early.
The market seems to be giving the Fed the benefit of the doubt that though it might not cut as early as it once thought, it's going to cut at some point this year. There has to be the expectation in this bull run that cuts are coming sometime this year, I would imagine. What happens if they don't?
I mean, if the Fed doesn't cut, I think it would pose quite a lot of risk for the stock market. I don't think the Fed's going to hesitate just because the stock market's risen or the ISMs have turned up. The Fed's policy rate of close to 5.5% is the highest policy rate in the world for any developed country. Look at the US 10-year, it's at almost 4.5%. Germany's 10-year yield is 2.6%. I think that the bond market itself is telling us that the Fed is overly restrictive right now.
Do you think they should cut in March?
I think the probability of cutting in March is higher than what's being priced in. And a lot of it will depend on what February CPI looks like, which comes out March 12th. But, we think there are some anomalies in the January CPI, including poor seasonal adjustment and the fact that auto insurance is actually accounting for almost more than half of the rise in the supercore services number. And if those start to show improvements, I think whatever sort of hot CPI we saw in January and the repricing reverses to a large extent.
That's a big deal. So what he's talking about there is that shelter already is 50% of the headline CPI, and then auto insurance is over 50% of some of that core CPI reading If those start to relax, meaning shelter relaxes, which I don't know because we're getting so much conflicting data about shelter. I don't know if that's going to relax, even though rents are coming down aggressively. And auto insurance starts to relax. You're going to have a CPI that materially moves down. Maybe not next month, but definitely in April, May. So even if we don't get the cut immediately, like everyone was thinking in March, we're going to get the foundation to be able to eventually get the cut. And that means, and here's the other thing. Well, we were talking about, is this going to keep being a bull market? We haven't even cut rates yet. And so the fundamental debate, I think, between everyone's mind is like, okay, are we cutting rates because something's going to crack in the economy, or are we cutting rates because inflation is going to eventually turn into deflation and we don't want to induce a recession, right? Are we cutting rates because there is a recession and we need to stimulate, or we're cutting rates because we don't want to induce it? I think it's going to be the latter because of the unemployment market, because of 3.7%. Like the fact that everyone has a job means that I don't know what the crack is in the economy. So yeah, like historically you cut rates if you think something bad's going to happen. As you can see in March, there's a 2.5% chance we're going to get a rate cut. But if the unemployment stays good and labor market stays tight, then I think it's going to be hard to make the argument that we're cutting rates because we need to stimulate the economy. Like the economy's stimulated, dude. There's a lot, like there is economic movement out the wazoo. I mean, there's jobs, there's opportunities, there's things going on. The equities are doing well, right? Real estate, like there are opportunities. I don't think that would be the reason for the Fed to cut. The Fed would cut because inflation's coming down and they don't want to make a recession happen. And if that's the case, equities are going to do even better when that happens because all those small caps are going to start doing better. It's going to be that same December pivot that we had from Powell in 2023. And I think it's going to be pretty good. July, we're expecting about 80% for a cut. June is about 60%, 65%. And then May, it's only about 17%. We're 16% we're expecting a cut. So not expecting too much of a cut likely happening in March or May in terms of the percentage chances. Now, here's a clip I want to play that is of me. So it's not narcissistic because I'm not talking. But this is a stat that I think is going to blow your mind on NVIDIA that a lot of people don't know about. Okay. Now, what's the stat? And then I'm going to let my boy Jose talk for a couple minutes. China used to be 25% of NVIDIA's overall sales. Let me say that again. China used to be 25% of NVIDIA sales. In October, not October 2002, October 2023, the US banned NVIDIA from selling to China. In Q4, this is a stat I think a lot of people don't think about. Their numbers went from 25% of revenue from China to 1%, and they still destroyed their earnings. Just imagine if that China revenue had been stable. Tesla's overall car sales are 25% in China. If China shut them down, if the US said, hey, you can't ship anymore to China, Tesla would be dead, dude. Tesla would be like a $50, $70 stock. I mean, investors would it would be catastrophic. NVIDIA somehow navigated that and continued to keep it going, which is why I don't think this is a bubble. I think only a company that knows how to manage their finances can actually do this. So here's Jose talking. He's held NVIDIA since 2018 about this specific thing. And for some reason now they're able to sell to China. Can you speak to what's going on with China and how that impacted their earnings?
Yeah, so China used to be 25% of this company's total revenue when you look at the data center market. And back in October, we got hit with export control due to national security defense, and rightfully so, I believe. But unfortunately, this quarter, the Chinese market dropped to single digits. So I think that's insane. First, just think about that a sector that used to be 25% of this company's total revenue dropped to 1% because it pretty much was eliminated, but yet the company was still able to beat guidance and see revenue growth. Imagine if that market was still there. So they mentioned that, hey, look, this quarter they worked with the United States government. Unfortunately, for quarter one, they still need to kind of test out these new chips that they made, and they got the okay from the United States government. So they're
and real quick, these new chips are going to be like less powerful than what the US wants them to send. Basically, that's the difference.
Yeah, that's pretty much it. You want it to be less powerful, and you want it that it's less powerful because of the actual hardware. Because I do believe before they might have made some small tweaks that could have been like hacked and kind of gone back to being their true form to some extent, where now these chips are like a whole complete chip where they're a lot weaker. So in theory, China can't use it against us. And these new chips, so they mentioned they're sampling it out to customers, but for quarter one, it seems like it's still going to be a single digit revenue. And
so this is a big thing. The reason I wanted to bring it up is that if these new chips that they're going to be giving to Chinese customers, which are not going to be as powerful supposedly as the chips that they were banned from selling, now they get to reaccelerate that growth. And in Q4, they weren't able to do it, which makes sense. In October, when you get hit with a ban from your country, you have to figure things out. In a few quarters, if that starts to pick up, and the Chinese business went to 0 in the past 90 days, and that starts to go back to maybe 20. I mean, the growth for NVIDIA is just not stopping. And I think that's the overall thing that we have to think about. This is what we've been talking about on the Market Open. If AI demand, GPU demand is not going anywhere, that demand is going to result in every company, whether you're a Nubank, Shopify, Elf, CleanSpark, C3 AI, Rivian, no matter who you are, you will find a way to operationalize AI. Now, not everyone will be successful in operationalizing AI, right? Maybe Rivian doesn't figure out how to make a profit, even if they have AI enabled in their enterprise. Maybe Nubank increases their margins versus other banks because they have AI implemented into their enterprises. The point is, it will create an industrial revolution in the broader stock market, which means companies will go up. Now, not every company will win. That's obvious, but there will be winners in this space, and the broader markets will decide to take a risk on a bunch of companies if they think that there is this big tailwind that is coming. And that really hasn't even started. ChatGPT came out in November. CleanSpark, $19 today, up 16%. And so if that's the case, I think it's a bull market. I don't think that bull market's necessarily stopping. Tesla is trying to push 200. Wow. There you go. Tesla. Let's see if there's any Tesla news. Let's go to Tesla Roddy real quick and see if there's anything main on Tesla. I didn't even cover this. I got to pull this up. I have two things I need to show you guys. I have two things I have to show everybody here today. Let me pull this up. It has to do with Tesla. It's actually really exciting what's going on right now. Really, really exciting. And I have a question I have to ask you guys because of this. Okay. So first thing I want to show you guys is what's his name? The bot. I have become a bot, a botist. Is that what you call them? I have become someone who is bullish on the bot. And I believe the bot is going to create trillions and trillions of dollars. Palantir, by the way, up 2.46%. I believe the bot is going to create trillions and trillions of dollars, not just for Tesla, but for a lot of companies that are in this space. I think the bot is going to be one of the most transformational products in the world. So let me share my screen right here. And let me show the Tesla bot, and then I have to show you guys the other news. So they posted this yesterday. And here you go. Here is the official Tesla Optimus walking. I think we saw it walk before, but it was being controlled. I think this is now autonomous walking, if I'm not wrong. But it is walking. My thesis on Tesla for now isn't even the cars at this point. I don't give a shit about the cars, quite frankly. Like the margins, volumes, whatever. If I'm buying Tesla at 600 billion, I'm buying it because this fucking bot is going to make them worth trillions, in my opinion. Now, why do I think they could potentially be worth trillions? Why do I think that's the case? Well, I think they could be worth trillions for a certain reason. And that reason is as follows. Okay, you ready for this news if you haven't seen it? Jeff Bezos, NVIDIA, Microsoft, OpenAI, Intel, Amazon, and Samsung have invested $675 million in Figure.ai. This is a company that you guys might have seen before. You guys might have heard about. I'll pull up one of their viral videos that happened before, but they had a video of a robot autonomously making a cup of coffee, which is, one of the craziest things in the world. The fact that the robot was actually doing something with that required like some actual, manual intellectual capabilities, like figuring out how to make a cup of coffee. 675 million. What an all-star list of investors, dude. Bloomberg leaked this on Friday, so somehow they got the news. Jeff Bezos put in 100 million. Microsoft put in, I think the article said 95 million. OpenAI is investing 5 million from their venture fund. That was in the article. Intel, Samsung, Amazon. This company publicly has been working with BMW to be able to create robots that do like hard things in factories to be able to make cars. I mean, this is a market, guys, that is big. You don't get Jeff Bezos, NVIDIA, Microsoft, OpenAI, Intel, and Samsung say, we're going to invest in a startup that doesn't make any money, that's 18 months old. The startup started like early 2023 or late 2022. And we're going to give them $500 million to see if they can take on Elon Musk and Optimus and potentially, be one of the 2 to 3 winners that's in the robotic space. I think there's a massive labor shortage. Half of global GDP is the TAM for robotics companies, it's $50 trillion. Global GDP is $100 trillion. If you replace half of that, that's a TAM that is unheard of. That is the biggest TAM in human history when we think about a market opportunity. 50 trillion. Why? Because people don't like to do a lot of these jobs. A lot of these jobs have massive amounts of turnover. They have massive amounts of churn, and they're dangerous, dude. A lot of these jobs, building cars for BMW, is not something that's fun or easy to do. If robots could automate that, and companies, instead of having to pay $150,000 in insurance and 401k and benefits, and they have to take a bathroom break and all this shit, you pay a robot, you license it for $100,000 a year. I mean, how, like, that is economical out the wazoo for these big manufacturing companies, every enterprise that has any level of warehousing. And then boom, there you go. You get a company like Figure that ends up raising $675 million. CleanSpark right now is hitting off. There you go. CleanSpark up 17% of the day, $19.28. So the reason I think that the Tesla bot thesis is going to make sense is because you don't get an all-star list of investors to put in this much money if you don't think that they have an actual chance to really capitalize on a market that is growing exponentially. Now, I'm going to be doing a lot more research on humanoid robots, and I'll be presenting that research over the next couple of months because I've really started to get into it. But it seems like this is going to be pretty exciting. This is the Figure robot right here that's actually making coffee.
Hey, Figure One, can you make me a cup of coffee?
I mean, pretty cool stuff, right? Pretty cool stuff. Now, a lot of people are saying, oh, this isn't going to happen for 20 years. Robots are not going to be allowed in your house. The government's going to ban it, yada, yada, yada. I saw a lot of people saying that over the weekend. So here's my question. Because I asked this question over the weekend. I genuinely want to know what you guys think. And I'm going to make a poll for this as well. I'm really curious what you guys think. If you had, let's say, $25,000, okay? Let's say you had $25,000. You could only pick one. Figure at $2 billion or Tesla at $600 billion. Both are working on bots. Tesla has a lot more resources, but Figure is only focused on bots, and they don't have to worry about the public markets, and they have a huge list of investors backing them. What is the better deal to you? Figure or Tesla? Figure or Tesla? I'm going to make a poll in the chat. I'm very curious what people say. Figure or Tesla? If you had 25 grand and you had to put in money either into a private company at 2 billion or public company at whatever valuation, 600 billion. I'm curious what you guys would pick. I'm curious. So there you go. Now again, people are like, oh, this is going to be so long until like we have real robotics. Like it's not going to happen for consumers in a long time. I agree with you. That's missing the point. Robotics are needed in the enterprise and in warehousing way more than they're needed at your home. Like, yes, there's going to be use cases for them at your home, but I don't give a shit about a robot being in my house and cleaning my laundry. Like I like doing my own laundry. It's very therapeutic for me. But outside of that market, which is the big market, the really big market, like the trillions of dollars in net income these companies can produce, is in licensing these robots to factories across the world. I mean, think about manufacturing and labor across the world, dude. Think about like this fucking cowbell. This was made by a human being. They put some parts together. Like if a robot's doing all this shit, like at scale, it's a different level of market opportunity. So yeah, I think it's a big market for enterprises, and eventually it'll be a big market for consumers as well, as they can buy it. Okay, so Tesla got 75% of the votes. Wow. You guys really wouldn't take a bet on Figure at 2 billion? That's interesting. I thought more people would say Figure. Yeah, the Figure CEO, he founded Archer. He sold a company for called Vettery for 100 million, and then he founded Archer, which is worth 2 billion in the public markets. He took the company public. I don't know if it's worth 2 billion anymore, but he took it public. He left the company, but he has 2 successful exits under them. People call him the next Elon Musk. If you look him up, Brett Adcock, you can look up his name. Is pretty inspiring, dude. I know everyone's bullish on Tesla, but dude, it's a $2 billion market cap versus 600 billion. Like just in terms of pure return, if Figure gets to 10 billion, you're up 5x. Like think about that. If Figure gets to 10 billion, if you invest at 2 billion, you're up 5x. Tesla has to go to 3 trillion for you to be up 5x. I feel like Figure is the obvious bet here, just in terms of valuation. I mean, I'm obviously bullish Tesla as well, and I'm going to start building out the Tesla position just for the fucking bot, to be honest. But I think from a valuation perspective, now granted, Figure could fail, right? Like that's the risk with the startup. It's I mean, more likely than not, it probably will fail if just given the way given the way startups are. But I don't know. I think that would be worth the risk. Wouldn't be that crazy. Rivian 1047. Wow, they're up 4%. Robinhood $15.06, dude. $15.06. Not bad. Not bad at all. Robinhood's doing their thing. The startup can either print or go bankrupt. That is correct. That is true. They can go bankrupt. That is a big risk. I get it. That is a big risk. Rango met with Brett, spent 45 minutes with him in Phil's coffee. Wow, Rango. Okay, so Rango, what would you do if you had 25, Figure or Tesla? That's I mean, I think at this valuation, it's. I mean, look, if Nvidia, Amazon, OpenAI, Jeff Bezos, Microsoft are all like, we're going to take a bet on these guys. I think, I mean, like, yes, startups fail, but either this thing is Theranos or this thing is going to be really big. And given the founder is not some, person who speaks with a super deep voice and tries to wear turtlenecks to be Steve Jobs, I think it has a chance of being big, even if it doesn't succeed. I definitely don't think it's Theranos. So we'll see. We'll see what ends up happening there. But Brett Adcock, I would recommend people check him out. He's a really, really interesting founder. ARM is up 10.8%. Rango says I would not bet against Elon. Yeah, I agree. I wouldn't bet against Elon. It would just be like one of those things that if you had to pick. But I mean, well, if you had to pick, then yeah, I guess you wouldn't bet against Elon. That's fair. I think the easiest way is to get exposure to robotics via Tesla. It's just Tesla's a public company. They have a lot more to deal with than a private company like Figure. Nubank 1058, that's up 3.4%. Amazon 175. Jeff Bezos has been dumping his shares and people have been buying his shares. Amazon continuing to maintain their levels very well. CrowdStrike 319. TQQQ up about 1%. SMH up about 0.99%. Coinbase 182. Wow, Coinbase is back at 180. It was stuck at 163 last week. So Coinbase now at 182. It hit 193. Now back down to these levels. Or now up from those levels at 162, now at 182. What else do we have? Square's down 4%. So I guess Square ran up too much. I don't know why they're down 4%, but they are down. Lussy Picker says, hey, mate, can you stay with us for the whole day today? I wish, guys. So here's what I'm thinking about. I'm thinking about so yes, on Friday I did a podcast with TJ at 2:00, and it was like an episode on options. If you guys are interested in theta and gamma and all that shit, even though as a male I'm an alpha, I'm not a beta. You see what I did there? But I think you guys will be interested in that podcast. You can check it out. It's in the live section of YouTube. I really like doing a podcast in the middle of the day at 2 p.m. What I am thinking is like if I can come up with shows with people during the middle of the day, like how CNBC has their morning show and then they have their afternoon shows. And then they have their market close. What if we can do the same thing here? What if I can get a group of people, like so my boy Jose, where I do the semis pod with every Friday, 7 p.m. What if I can get 5 to 6 more people, and every day in the middle of the day, we have like an afternoon show, and then we have the market close after the market open. So it's basically 3 live streams back to back to back. I think that's possible. I just have to find the right people. I have to kind of plan this stuff out. But if that's the case, CleanSpark 1969 up 19% today. It looks like it's trying to crack 20. I think that would be a cool way to stay with you guys throughout the entire day without literally being on this live stream. And that episode could be something that's uniquely special to the guest that is knowledgeable in whatever they know about. But it wouldn't be a 5-minute segment. It would be like a 45 minutes on talking about the week's news in that one category. So I think that Market Lunch with Amit. Yeah, Market Lunch. That's a perfect name. We can fucking name it Market Lunch. 12 p.m. to 1 p.m. Boom. Market Lunch. That would be amazing. Eric Wood says Amit should market a coffee brand. I actually am thinking of marketing a cocaine brand. I think that would be more fitting than coffee. But coffee's cool too. Amit wants to spend all of his waking hours talking. Dude, that's like what I know how to do. That's why when you're on blow all day, this is what happens. Okay, so TSM 129. This is why I keep rubbing my nose so much every time you guys see it. DPZ 464. They're up 7.4%. Walmart 58. S&P 508. This market's not slowing down. CleanSpark's really trying to crack 1875. Where's the broader? Wow, look at the right-hand side of my screen. Oh my God, dude. Coinbase up 10%. CleanSpark 18. Ethereum 31.18. Marathon 15%, Riot 10%, Hut 8 Mining 10%, Cypher 8. Why isn't there a Bitcoin mining ETF, dude? There should be an ETF just so you don't have to worry about all the miners. You just buy the ETF. I mean, I know there's a Bitcoin ETF, but still, like these miners have outsized gains because they're operating at a delta to Bitcoin. I feel like there should just be a Bitcoin mining ETF. That'd be so much easier for people to get exposure. Unity earnings, we'll talk about that today. Why is ETH running? So we talked about it this morning. There is speculation of the spot Ethereum ETF being approved. Now that I still think is a long way to go, but BlackRock submitted their proposal for it. And a bunch of whales took off about $80 million worth of Ethereum off exchanges like Binance and Kraken this week, which means they're likely getting those Ethereum onto different, more secure exchanges. And so the sentiment is that accumulation is starting to happen and there's starting to be a run. Also, by the way, I mean, Bitcoin ran. So if Bitcoin ran, and I still think Bitcoin has room to run, but when Bitcoin runs, you would argue that there is going to be a little bit more exposure to other alternative assets. Now, Ethereum, I don't think is an alternative asset, but in the context of Bitcoin, it definitely is alternative. And more people will be excited for different things. Bitcoin at 51,000, Ethereum at 3,000. When retail really starts to get into the market, you're going to see a lot of more people get excited for something like Ethereum because it's just cheaper. I know I was back in 2021. It was easy for me to buy Ethereum versus Bitcoin. So I think that's another reason why people are getting more excited for it as well. There's this one post I wanted to show you guys on someone who wrote up a little bit of a thesis on Twitter. They responded under my Ethereum post, and the thesis was around the rotation that's happening in Ethereum. Let me see if I can pull that up real quick. It was a really, really good post, and basically their argument was that we are seeing a massive rotation in Ethereum, and as a result of that, we are going to see that momentum start to go higher. I can't find the post, but I'm going to try to find it maybe for market close, and I'll show you guys. But the point is that if there's being a rotation in the sector, then we're going to have Ethereum start to do a lot better. Money's just flowing in, and money's flowing in from different places. Anything new with Palantir? I've been busy. Nothing really new. Palantir hasn't had a PR since the Coles partnership. Right now, up 2.66%. I did buy 100 shares of Palantir on Friday, $22.89. I tweeted that over the weekend, or on Friday, if you guys saw. So, yeah, nothing crazy. I think Palantir's. Looking at the numbers, dude, I think Palantir from 21 to 23 is a good buy. I think the market's changed. And unless we get a massive rug pull, it wouldn't just be Palantir, it would be the entire market. I think, now look, we're not out of the doghouse. We need at least another month of consolidating in this range. But I think 21 to 23 is a buy for Palantir. And so we'll see. We'll see how it plays out. We're going to probably see AIPCon very soon. I think AIPCon is happening very soon. AIPCon 3, that's been talked about in the Palantir community through a variety of sources. People think that that's happening. And then we're going to get some new partnerships in March. We haven't gotten a partnership since the BAPCO deal, which was after the Coles deal. And so those partnerships will happen. Now, granted, we can't really complain, dude. The stock's up 45%. I mean, like we can't get that greedy. CleanSpark now up 20% of the day. But still, obviously it's done pretty well. Amit, how about an innovative talk daily surrounding Palantir-esque plays? Wouldn't need to be long. Lots of companies out there. That's a good idea. I think there's a lot of ideas for mini shows we can create on the channel, guys. A lot of ideas. And yeah, let me know. And feel free to DM me on Twitter. I read all the DMs. Let me know what you guys are thinking. But I think every day market open ends at what, like 10:45-ish? Then by 12 to 1, we do like a lunch with a Mitt type of show, and we have a new expert talk every like that. That should be a show you listen to just get smarter. That should be someone who just spits hot fire. They're talking about shit that I don't know about. It's really like good stuff. Robinhood at 15, and then we have the market close. So I'm gonna try to figure that out and plan out and see what we can do there. Sell when everyone is greedy, buy when everyone is fearful. So one of the things I will say to that, which that's an obvious statement that should be repeated during this time, I do think that I don't know if everyone is greedy right now. I know the indexes say we're in extreme greed, and I get that stocks are at all-time highs, but the numbers are there. Like, tell me a stock that is massively overvalued right now. Put it in the chat. What is a stock that is massively overvalued? Like, egregiously overvalued. I would like to know what company you guys think. Because I tried to do this exercise over the weekend, and I was like, it's not NVIDIA. You can't say something with a 35 PE is overvalued. You just don't know how to do valuations. So if it's not NVIDIA, what's the company? It's actually not SMCI either. It's not overvalued, dude. It's like SMCI is also it's like a 39 PE. That's not overvalued. You could say it's run up a lot, and you could say it's going to get rug pulled, but you can't say it's overvalued. ARM is one I would agree with, but ARM to me is a unique case in the fact that there's only 99 million shares outstanding, right? So that's why people are chasing it. And so that's why it's quote unquote overvalued. But an actual stock being overvalued in this market, like in 2021, you could name Facebook was trading at like a Facebook was $1 trillion company and they were losing 70 billion a year, right? Like that didn't make sense. You could say that was overvalued. Amazon at 180 when they were, their in margins were like 3% because they had expanded so much for COVID. That was overvalued. I don't know if Amazon at 175 today, with 10 billion net income a quarter, I don't know if that's overvalued anymore. AMD, okay, you could say AMD is kind of overvalued. You could say that. I mean, but AMD is running because of NVIDIA. So you could probably say that. But in terms of egregious, just like, oh my God, you look at it and you want to throw up type of valuation. Someone said PayPal. Okay, please exit the chat if you think it's PayPal, please. That just makes it so sad, dude, with PayPal. I don't know that company. I really don't know that company. And if I don't know that company, it's hard to imagine. Pelosi bought PanW, did she? Or are you just saying that? That's why PanW is up? Are you just saying that? Dude, could you imagine? She already disclosed a while ago. Wow, it's above 300, dude. This thing was at 275. Look at this shit, dude. This thing was at 275 and it's at 300. This is crazy, dude. The market was just the market. Like this is what I mean about this market, dude. People want equities and when something falls 30%, boom. That's an opportunity. I think if NVIDIA was to fall, like, let's say 7%, that the amount of dip buyers that would be waiting. I mean, same thing with Palantir. Palantir falls 7%. The amount of people waiting to buy the dip. Robinhood got back to $12, now at $15.05. Now that people know what the hell is happening. Like, that's the other thing that's stopping me from feeling so bearish. If we get a dip, we will have people who buy. By the way, there's $6 trillion on the sidelines also ready to buy, just salivating for some crazy dip. So I don't think it would be a dip that would last that long either. So, we'll see. We'll see. All right, guys. I think we'll end it off here. Thank you, everybody, for being here. Let's do word of the day. Robinhood, $15.09, and Palantir at $23.55, up 2.54% on the day. Let's do some word of the day and end it out. The only thing I ask is please make sure to follow me on Twitter. That is the one platform to please follow me on. That is in the chat. Please follow me there and like and subscribe on YouTube if you have not liked and subscribed to the stream. All right, word of the day, esculent. I have not looked at this word yet. Esculent. Suitable for use as food or edible.
Esculent.
Okay, so it just means edible. It's a fancier word for edible. Explorers in the jungle had to rely on their survival skills to find esculent plants for sustenance. The food critic praised the restaurant for its innovative dishes featuring esculent flowers and herbs. All right, so next time you're on a date with your girl, you got to look her in the eyes and say, darling, you are looking rather esculent tonight. And that's it for me. Thank you, everybody, for joining the market open. I'll see you 3:45 for the market close, and let's see how the market goes from there. Thank you, everybody. I'll see you guys later. Good night. Well, not good night, good morning, but you know what I'm saying. Why am I so awkward? All right, bye-bye.